Okay, good morning, everyone, and welcome to this morning's Coffee Microcaps morning meeting. You're all very welcome to this morning's event. For anybody who is joining us for the first time, my name is Mark Tobin. I'm the founder of Coffee Microcaps. And for anybody who is one of our regular attendees, you're very welcome back. I'm going to quickly just run through these slides. And first up, I'd like to mention RAS Research as a Service, our sponsor here at Coffee Microcaps. If you are looking for coverage of small and microcap stocks not kind of covered by many of the brokers, please do check out their website. They have free version of the research and also a subscription version that you can pay for as well. So plenty of content on there, and you can deep dive into more content on the subscription version. A warm welcome to any of our friends from ASIC joining us this morning. For anybody who is joining us for the first time, the companies we tend to have presenting on here and at all our events, market cap under 300 million, that is our definition of a microcap, in revenue and approaching cash flow break even, or indeed are already profitable. So we tend not to have companies from the resources and biotech sectors here. So what I like to call industrial microcaps, which covers basically all the other sectors, whether that's industrial products businesses like we have this morning, financial services, healthcare, retailers, basically anything kind of outside of resources and biotech generally fits the bill. Structure this morning's webinar, we've got two companies presenting this morning, 30 minutes each, which will roughly break into a 20-minute preso and 10 minutes of Q&A. If you do have any questions for our presenters, please type them in the Q&A box rather than the chat function. Just makes it easier for me to moderate the questions to our presenters. And please note the webinar is being recorded and it will go up on the Coffee Microcaps YouTube channel tomorrow morning, and that is with all of our other previous content that's on there. You can follow the YouTube channel for the recording of this event, and all our future events will be going up there. Twitter, LinkedIn as well. And yeah, I do write a monthly newsletter that you can get on the Substack platform. Our first presenter this morning is a new company presenting here at Coffee Microcaps. I'm delighted to welcome Troy Mortleman from Gale Pacific, and I see CFO Dexter Clark has joined us down here in the corner as well, out of my eye. And then we are going to flip from Melbourne across to Adelaide, and we'll have Rob Veitch, CEO and MD of Aerometrex, joining us as our second presenter. That is enough from me, so I am going to stop sharing my screen and I am going to hand you over to Troy. Troy, if you want to start sharing your presentation, I'll let you know when I can see it coming through. It's just loading now, Troy. Yep, I can see the cover slide now, Troy. You can take it away whenever you're ready.
All right, perfect. Excellent. Thanks, Mark. And good morning, everyone. And thank you for joining us at our first Coffee Microcaps Investor Webinar. My name's Troy Mortleman. I'm the CEO of Gale Pacific, and I'm really delighted to speak with you all today to provide with you an overview of Gale Pacific, as well as our recent financial results. So I can just there we go. So let me just sort of walk you through what I'll cover today. We'll start with who we are and what sets Gale Pacific apart in the global market. I'll then showcase our product portfolio, followed by a regional overview to highlight where we're positioned and our market reach. After that, then I'll walk through our FY25 results and our key performance drivers before closing with our outlook and our strategic priorities for the coming year. And at the conclusion, as Mark said, I'm very, very happy to take any questions that you may have. Look, Gale Pacific is a global leader in technical fabrics and shade solutions. For over 70 years, we've delivered innovation, engineered durability, and sustainability across commercial, industrial, and consumer markets. And our products are trusted worldwide across, agriculture to construction to then home improvement. With our Coolaroo brand, synonymous with outdoor comfort and sun safety. But what truly sets us apart is our commitment to engineered performance. We invest in proprietary manufacturing technologies and rigorous R&D, which ensures our solutions deliver real-world benefits, which are protection, longevity, and also sustainability. Our story began in Melbourne in 1951 when Harry and Barbara Gale founded Gale Scarves as a family business, initially producing scarves, but also baby clothes. But in the mid-1970s, we applied this expertise in knitted apparel to create knitted shade cloth, which is a breakthrough innovation at the time that's become a real defining feature of Gale Pacific. Then after refining this innovation in Australia, we then entered the United States market in the late 90s, and then soon after expanded into the Middle East, where we've now operated for around 25 years. Then in the early 2000s, we relocated our shade fabric manufacturing to our dedicated facility in China, but then we also expanded manufacturing capabilities with local coated fabric production. And so throughout all of these years, we've established ourselves as a global leader in technical industrial textiles. Gale Pacific operates a truly global business, and we've got presence across key regions in Australia, the United States, and the Middle East. And as part of our growth strategy, we've just recently expanded our presence in Latin America by establishing new distribution partnerships in Mexico and also in Argentina. And our operations are supported by a strategic manufacturing and distribution network, which enables us to meet the demands of this diverse customer base. Our total team globally totals around 420, and they bring together a broad range of skills and expertise that are all dedicated, though, to delivering real value for our customers at a scale. Gale Pacific, at our core, we're a manufacturer. We operate two wholly owned facilities that together produce products that generate around 85% of our total revenue. Our primary site is in Ningbo in China, and what that does is it handles the full vertically integrated process for our knitted shade fabrics. And this is all the way from yarn extrusion or to knitting, and then through to cutting, sewing, and assembly, where we supply both bulk rolls of fabric, but then also prefabricated shade sails, as well as outdoor roller shades and elevated pet beds, which goes into our consumer markets. We're also really proud to have maintained Australian manufacturing for nearly 75 years, with our Braeside, Victoria facility here where I'm located, standing as the country's only producer of advanced polymer fabrics. And this vertical or versatile site also provides moisture-proof coatings and laminations for fresh food packaging, which is a service that we've also done for about 25 years. So this manufacturing footprint gives us control over every stage of production, which ensures reliability and flexibility and consistent quality for our customers right around the world. So let's now take a look at our products across both our commercial and our retail segments. In commercial applications, our knitted and coated fabrics are relied upon by professionals across agriculture, horticulture, and infrastructure to protect valuable assets and crops, often in some of the most harshest environments on the planet. They're designed to perform where protection and containment and coverage are absolutely critical. So whether that's preserving harvested grain or managing water resources, supporting controlled growing environments or delivering shade and shelter in large-scale installations. And for decades then, our customers have trusted us to deliver that performance and reliability, really where it matters most. That's reducing spoilage in grain, whether it be in improving storage efficiency for those items in water, creating safer and more comfortable environments for communities and industry. And our reputation in these sectors is built on technical excellence, as I outlined earlier. It's about durability, but importantly, having a really deep understanding of the operational challenges that our customers face. So our consumer product offering then is really built around enhancing outdoor living, providing families and homeowners with dependable, stylish solutions that deliver both shade and comfort and protection. We offer a complete suite of backyard shade products that are designed to suit virtually any outdoor application, whether you're relaxing and entertaining to protecting people, pets, and property from the elements. So these products include high-performance knitted shade fabrics and shade sails for flexible, breathable coverage, outdoor roller shades that combine both functionality with contemporary design, elevated pet beds, which are engineered for comfort and durability, and also a range of umbrellas and gazebos that offer portable but easy to install shelter. And our Coolaroo brand really leads in this space, and it's recognised for innovation, quality, and long-standing commitment to both sun safety but also outdoor comfort. And we partner with major retailers to ensure that these products are accessible and trusted by consumers who are looking for that reliable, sustainable solutions for their homes and for their gardens. Innovation has just been a staple of this company, for the last 75 years. We set the global benchmark back in 1976 when we invented knitted shade cloth, and those proprietary manufacturing technologies do continue to shape industry standard. And our R&D leadership is demonstrated by having 63 patents that we've launched worldwide throughout our history. And we've introduced a portfolio of category-defining products like outdoor roller shades and the original elevated pet bed, both of which feature our HDPE, high-density polyethylene fabric. We're at the forefront also of sustainable manufacturing, and we were the first to market with closed-loop recycled grain storage fabric that advances circular economy practices that we made right here in Australia. So our commitment to innovation, again, is focused on delivering meaningful and measurable value and producing those high-performance solutions that benefit not only our transactional customers, but also our end users as well. So we'll take a deeper look at the regions that we operate across the world, and each one of these regions contributes to this diversified revenue stream that we have and also our growth strategy. But each one of those faces unique market dynamics that really shape how we approach each of them. So Australia and New Zealand are our foundation markets, and where Gale Pacific has built strong market leadership and a really well-balanced presence across both consumer and commercial segments. We have about 85% people employed across the region, and we're supported by an extensive distribution network that can service our customers right across the country. And we generated in FY25 revenue in that region of $79.5 million. So in our consumer business, our retail presence in ANZ is really anchored by a long-standing partnership that we have with Bunnings, where we hold category-leading positions across 5 distinct product categories. We offer over 220 SKUs, spanning both the Coolaroo brand but also Bunnings private labels, which is available in more than 350 stores. And we hold up to 90% share of shelf across some of those key categories. We've also worked closely with Bunnings in New Zealand to harmonise that product range with Australia where it's relevant, which ensures consistency across our 2 markets, but also optimal coverage as well. And our Coolaroo branded shade products are exclusively endorsed by Cancer Council Australia, which further enhances our market credibility and that commitment that we have to sun safety. But beyond Bunnings, our products are also arranged in retailers like Mitre 10. We're on Amazon and Temple & Webster in e-commerce, and also at Home Hardware as well, which does increase our broad accessibility for those consumers. So this sort of network positions us at the forefront of outdoor comfort and sun safety protection and makes those high quality, reliable products available to households and communities right across Australia and New Zealand. So our commercial business in Australia operates across a really wide array of industries, and we've built enduring relationships with customers who just trust our products year after year. We're the principal supplier of coated fabric to Graincorp. And those materials are used in grain tarps that protect harvested grain at over 160 storage sites right across the country, which safeguards the quality of that grain, but also reduces spoilage as well. We also produce high-quality liner fabrics that we distribute to Australia's leading water tank manufacturers. We deliver robust and dependable shade solutions for car parks, schools and playgrounds, and we also provide specialist orchard and vineyard netting to top fabricators, which help, again, protect those assets and helps enhance safety and resilience and comfort across a real variety of environments across the country. We also have a long-term contract manufacturing relationship with Visy, and we play a vital role in their supply chain by providing moisture-proof coatings to their paper and board products. Now, these materials then are used in fresh food packaging for things like stone fruit, table grapes, seafood. It supports Visy's efforts to help customers transition to more sustainable packaging solutions. So Gale Pacific's been in the Americas now for nearly 30 years, and despite recent trading challenges and the impact of elevated tariffs, the Americas still remains our largest growth opportunity. In the FY25 year, our America business generated $75.7 million in revenue, with about 85% of that coming from our consumer segment. We have a team of around 50 employees that are split across our sales office, which is based on the East Coast in Charlotte, North Carolina, and on the West Coast in our distribution facility in LA, which supports our reach right across the country. We've built a really strong retail distribution footprint in the United States across some of the world's largest home improvement retailers. Now, our Coolaroo branded outdoor roller shades are stocked in nearly every Lowe's and Home Depot store across the United States, and that's about 3,800 locations. And we're the only supplier of this product category to both of these retailers. We also operate a dedicated custom size roller shade program, which broadens consumer choice and selection. And this, I think, is a really proud achievement for an Australian brand like ours in that global home improvement sector. And also what it does is it provides a very sound platform for us to expand our category presence. And our ambition then is to replicate the strong category breadth and depth that we have in Australia and at Bunnings in retailers that have 10 times the store count. Now, the e-commerce channel in the United States for home improvement is also very highly developed. And so we've built capability to leverage this effectively. And we have 56,000 five-star reviews on Amazon for our original elevated pet bed. And we also have dedicated ranging across other specialty e-commerce retailers. And our retail reach extends beyond the US. And so we have ranging for our Coolaroo products at Costco, both in Canada and also in Mexico. And as I mentioned, we've just appointed some new distribution partners in Mexico and also in Argentina, which supports our expansion of these products into those climate appropriate regions. Gale Pacific was among the first to introduce architectural shade fabric to the US market some 3 decades ago. And so since then, we've built a real leading market share through strong relationships with our commercial shade fabricators, but also having strategic partnerships with top textile distributors. Our commercial shade fabrics are specified and preferred for a wide range of private and public infrastructure projects, and we continue to drive awareness and adoption of shade sales in commercial applications in a still emerging industry, but is still steadily expanding. And our commercial segment growth in the US has outpaced our consumer business growth in recent times, and FY25 marked the 3rd consecutive year of revenue increase. So what we're doing now is we're leveraging the reputation that we have in our other regions like Australia to broaden our category reach in the Americas. And we're targeting sectors like agriculture and horticulture, where we have proven capability in Australia to grow in the Americas as well. We're also actively supporting long-standing Australian customers as they establish operations in the US, and that'll help us to extend our coated fabric products into those new markets there as well. So look, this high margin segment for us presents a significant growth opportunity for Gale Pacific into the future. Beyond our core markets in Australia, New Zealand and the Americas, Gale Pacific established a long-standing presence in what we call developing markets. And so this footprint spreads across 3 key regions, with our strongest presence being in the Middle East. So here we have 9 employees that are located across the UAE and also Saudi Arabia, and it's supported by on-the-ground inventory in Dubai. We also have dedicated sales staff in Barcelona and also in Bangkok, which enables us to service both our existing customers in those regions, but also look for new customers in those growth markets. So this combined region generated $16.8 million in revenue for FY25, and due to our efficient, low-cost operating model, these markets deliver our highest profitability levels. So our business across our developing markets is predominantly in the commercial segment. Gale Pacific really leads the market in these regions, with our architectural shade fabrics among the first to be introduced in the Middle East and in Europe. And so today we hold a leading share in both regions, which is supported by more than 20 years of distribution partnerships across Spain, Italy, and Israel. And this network now covers most of continental Europe. Our shade fabrics are engineered and trusted to withstand some of the harshest conditions on the planet, and not much more so in the Middle East, where temperatures regularly exceed 50 degrees Celsius for extended periods of time. And so that leads our products then to be specified by governments in the regions for school play areas, where legislation actually requires most outdoor spaces to be covered with shade. And so with new communities rapidly developing, particularly in the UAE and in Saudi, the demand for new schools is rising. And so these government-driven specifications are set to fuel further growth for us as the region expands. And our technical performance in these extreme environments also drives major international car brands to select Gale Pacific shade fabrics for their large vehicle holding yards, ensuring protection of those really valuable assets against that relentless heat that we get in the region. So then in Asia, our Coolaroo branded consumer products are arranged in home improvement stores in Japan. We've got about 30 SKUs across 100 locations. And our architectural shade fabrics are also distributed in Thailand, Vietnam, and Indonesia. And we see significant potential to extend our share and reach across these climate appropriate regions where we have demonstrated capability to offer meaningful value to both a consumer and our commercial segments. So moving then to our financial results for FY25. FY25 was a year of two distinct halves. We delivered strong momentum in the first half with revenue growth and margin improvement across all of our regions. However, the second half presented a very different environment, particularly in the United States, where consumer confidence fell sharply and elevated tariffs on imported products into the US placed sustained pressure on demand during that peak North American trading season for the North American summer. So revenue for the full year fell by 1.2% to $172 million. And then earnings before interest, tax, depreciation and amortization declined by $2.2 million to $12 million, which was in line with our guidance. The imposition of reciprocal tariffs in April on goods from China to the US did have an impact on second half profitability. However, this was lessened by increased inventory levels that we brought into our US warehouse across Q2 and the early part of Q3. But when adjusting for non-recurring costs associated with the implementation of our Microsoft Dynamics 365 ERP platform, executive leadership transitions we made in the first half, and also write-off of capitalised development costs, normalised EBITDA reached $19.5 million, which represented a modest improvement on the prior year. Skip one. At the close of FY25, net operating cash flow was $0.1 million compared to $26.7 million in the prior year. And this was really driven by that elevated level of working capital at year end as demand for our retail products in the Americas in the second half was lower than expected. This increase in working capital was also then the key driver of higher net debt, which rose to $8.9 million compared to $0.7 million in the prior period. So turning to our key drivers of that full year performance, Australia and New Zealand delivered a strong summer season, highlighted by a record December sell-through at Bunnings, and also increased volume of our grain storage fabrics where we gained share from competitors. Our developing markets region continued to build momentum, and we had growth in the Middle East, which was still underpinned by continued credit discipline and management, and also strategic project wins. In the Americas, second half revenue was down by 25% from the prior period as those tariff-driven cost pressures and weaker consumer confidence impacted the demand in our peak season. And as I mentioned, profitability was impacted by those one-off costs with our ERP implementation, leadership changes, those write-off of capitalised development costs, but also foreign exchange losses from currency movements in the first half. So look, as we move into and move through FY26, our primary focus is returning the company to profitability and ensuring the long-term sustainability of Gale Pacific in an environment that still remains largely uncertain. In the United States, we do expect retail demand to remain under pressure as elevated tariff-related costs continue to flow through to shelf pricing, which impacts consumer behaviour. And so to address this, we've worked closely with our customers to implement price increases to offset a portion of that tariff impact. But in addition, we're taking decisive action with a comprehensive reset of our US operating model. Now, this is not a minor adjustment. It is a fundamental restructuring designed to simplify our operations and to eliminate inefficiencies and to materially reduce costs. And so these changes are critical to restoring profitability and then improving our competitiveness and ensuring the long-term sustainability of our largest market. At the same time, we are accelerating the diversification of our manufacturing footprint to reduce risk and strengthen our resilience across our supply chain. And so the completion of roller shade assembly production trials in Southeast Asia throughout the period does mark an important milestone in this strategy to reduce tariff exposure. This transition, though, is highly complex, but we are committed to advancing this throughout FY26 by establishing long-term supply partnerships outside of China. And this is a necessary and essential step in building that flexible, more cost-efficient manufacturing base that supports global market, but also underpins our future growth. But then beyond our core markets, we still see significant opportunity to continue that expansion in high growth regions like the Middle East and Asia, while exploring climate appropriate markets where our engineered fabrics deliver real value. And then in parallel to that, we remain firmly focused on driving profitability in our core markets of the Americas and the ANZ region. This means for us deepening partnerships with our key customers, strengthening our execution, and then expanding that value-added product offering that offer clear differentiation. And so these priorities are critical, for us in navigating those near-term challenges, but also at the same time positioning Gale Pacific for sustainable long-term success. So we'll provide further detail, including performance guidance and an update on that US operating model reset and our manufacturing diversification work at our annual general meeting later in the year. So in closing, so whilst FY25 did present significant challenges, we are confident in the decisive actions that we're taking to strengthen our business and deliver improved financial performance. Our priorities are really clear. We're focused on restoring profitability, building greater resilience across our operations, and capturing growth opportunities in both our core and developing markets to establish Gale Pacific for lasting success. So I just want to thank everybody for joining us on today's briefing, and also to thank to our shareholders on the call as well for your continued support of Gale Pacific. So I'll hand it back to Mark, and I'm happy to take any questions that you may have.
Thanks, Troy. We do have a couple of questions, but we're a little tight on time. So there's two here related to the Americas and, stuff you're doing around the tariff, stuff like that. But as you said, you're going to give a more broader update on that at the AGM. So I'm just going to, I won't say forget, I'm going to leave those two for this morning's event. The first one, though, is around, you're trading at a big discount to NTA or NAV or whatever. And, the question is around just, why do you think that is, given it, such a kind of a long-standing business with like such a kind of a long-standing track record?
Yeah. We just got to get more consistent in delivering sustainable profitability. I think that's been the largest challenge. I think we do have a volatile revenue base in some of our core markets. It's highly impacted by seasonality, and navigating that and navigating the appropriate investment to be able to make through that does lead to volatility in some of our results. And so that's really what this simplification program that we're working on and trying to harmonise things and reduce inefficiencies is to be able to and expand into new markets is able to be able to diversify that and mitigate some of those risks that we have in our core markets. That's going to take a little bit of time, but importantly, reducing that cost base, for us, we have a good, strong business at its core. We have a solid balance sheet, and doing the things that we can control are the things that we're focused on throughout this year and into the future to be able to then start delivering sustainability through our results, which then we expect to be able to drive greater value for shareholders.
Yeah, and then just another question is on maybe just give us an insight on the competitive landscape within the US? Are you competing against, people who do the same thing as you, or, is this, a far superior product that, just is getting going in terms of its life cycle and customer acceptance and customer awareness within, whether that's on the retail side or on the commercial side, maybe more on the commercial side, given the difference in SKUs or the balance between retail, commercial in ANZ versus the American market.
Yeah, yeah. The American market's still an emerging market for shade products in particular. So, as I mentioned, we're the only supplier of outdoor roller shades in Lowe's and Home Depot, but that's really the only category we have a meaningful presence in. Unlike at Bunnings, where you have 220 different versions of products that are available any day of the year. Shade is a very seasonal program in the United States still, and there's still a lack of awareness about what options are available to consumers. And so that's why it sort of gives us a really important sort of footprint to be able to grow from and to be able to leverage that. Awareness is growing in the United States from consumers around the benefits of sun safety products. But more importantly for them, it's about comfort and providing comfort for outdoor living. So it's still an emerging category. Same thing in the commercial space as well, where, as I mentioned, it's still emerging. And part of our job is not only to increase share, but it's also to increase awareness of these types of solutions as options for infrastructure. But it's still a huge opportunity for us to be able to lead that charge.
Yeah, and hopefully as the US market grows and you have the Australian New Zealand business, the seasonality starts to balance out a bit, and
They offset
obviously
each other.
Dubai and as well, if you can get
That's
the
right.
kind of two hemispheres going at the same time. Troy, we're just bang on time here, so we're going to have to leave it there, and we will move to our next presenter, but hopefully we can get you back in maybe early 2026 once the next set of results are out, and we'll catch up on everything Gale
Mm.
Pacific then.
Yeah, great. Thanks, Mark. Thank you.
Thanks, Troy. Thanks, Dexter. And we will now hand over to our second presenter. Troy, if you could stop sharing your screen, that'd be great. And I will ask once, yeah, he's stopped now. Rob Veitch from Aerometrex. Rob, if you want to share your presentation deck, that would be great. Yeah, it's just loading now, Rob. Yep, I can see the cover slide now, Rob. You can take it away whenever you're ready.
Okay, thanks, Mark, and thanks everybody else for joining and showing an interest in Aerometrex. I'm going to go through just a bit of obviously the disclaimer for ASX requirements regarding our reporting here. So this is in the presentation. Just going to go through a little bit on what we do and the history as a company. I know some of the people on this call are probably aware of this, but I'm going to just, I guess, start from the beginning a little bit and explain who we are and what we do. The company's established in 1980, so we've been running for about 45 years, so well-established business, headquartered in Adelaide, and around about 100 staff. So we also have an office in Queensland, and we have a growing presence in Sydney as well, and we'll likely soon open an office there as well. So we were one of the first companies to introduce large format aerial imagery to Australia, so industry pioneers in that area. In 2012, we developed a proprietary 3D solution. So this is again using aerial imagery to create 3D models of cities and other locations. In 2015, we acquired a LiDAR business out of Queensland called Atlas. So this was a service or a project business that was undertaking LiDAR work, and I'll explain a little bit more about that in a minute. In 2018, we made the decision to introduce MetroMap. So MetroMap is a subscription-based image service. So unlike previously where we'd undertaken project work, this is a subscription product where we capture imagery once and we sell it lots of times, basically. So this was, I guess, a real strategic change in direction for the business to undertake something like this. In 2019, Aerometrex was listed on the ASX under the banner AMX. And made the, I guess, the public announcement or direction that we were looking to transition to a SaaS or a DaaS, as a data as a service platform. And certainly that's over the last 5 or 6 years, it's been our priority in terms of moving our business towards that. So a little bit about our capital structure. So market cap around about 19 million at the moment, made up of some of the founders and board members as well. Also a mix of institutional and retail shareholders in that. Cash balance of just under 4 million, share price around 20 cents at the moment. So in terms of our offerings, so three core offerings, we're dealing in aerial imagery. So this is via our subscription service, like I mentioned. So this is capturing imagery on spec, if you like, where we capture it once, we sell it to many different organisations. So we also work with aerial LiDAR. So this is basically a LiDAR scanner which is pulsing lasers onto the ground and measuring terrain, vegetation, built objects, or anything like that. So we have the imagery, which is, I guess, a 2D product. We have airborne LiDAR, which is, I guess, giving the geometry or the 3D aspect to it. And then we have our 3D modelling solution, which is, I guess, a combination of both of those things, where we're getting 3D geometry of terrain, built objects, things like that, with photorealistic colouring and materials on it. And certainly we see this as a growth product as well for various applications. So in terms of our aerial imagery, so Metro Map, like I said, is a subscription service. We capture all of the major city areas up to 4 times a year. We capture the outer the outer metropolitan areas roughly 2 times a year, and regional areas about once a year. And so this is fed up either through API or through our map viewer browser, and our customers can see up-to-date imagery, but also historical imagery as well. Can look back in change over time and things like that. We pride ourselves on having the most accurate imagery, so certainly from an aerial perspective can go in and measure between buildings and certain areas and things like that to a high degree of accuracy. Different applications for this. So, organisations use it for planning. We have a lot of government, local government, a lot of engineering companies, those sort of things are using it for planning. We also have a lot of applications in change detection. So again, local governments may be wanting to see how an area is changing over time. They might want to see, how many swimming pools or how many solar panels have appeared over a period of time, and they can see that with our high resolution imagery, along with insights that go with it. So we also still do this on a project basis in an opportunistic way. So if we're flying through Sydney or Melbourne and somebody wants an adjacent area, or they want to capture at a particular point in time, we can do that as well. It's not our core focus, but we can do it when it makes sense to do that. I guess the other thing that we include in the imagery is we have AI developed insights. So I mentioned swimming pools, solar panels, vegetation, building footprints, things like that are generated from our imagery, and we can feed these up either as a separate product, or we can feed we've just started recently feeding these up through our map viewer browser as well. A few different use cases for this, urban planning, like I said, government, engineering companies, really all the way down to single people tradesmen who might use it for quoting without having to visit on site and things like that. So we have everything from very small businesses all the way up to large government organisations and engineering companies. So aerial LiDAR is, like I mentioned, it's pulsing lasers back and forth to the ground. A lot of different applications here where perhaps mining resources companies are measuring stockpiles and pit depths, things like that. We can measure tree canopies for various sort of environmental planning. We can do change detection with this as well, where we might be looking at environmental monitoring, erosion, coastal sand movement, things like that. as well, and we can get various other products like contour lines and things like that. So we have mining companies where we perhaps will fly their sites monthly and manage change over time, that they're looking at different stockpile heights and things like that. Growing use of this in some of the agriculture, and particularly in the ag tech sort of carbon farming markets, where we've seen considerable growth in the last few years. So our 3D modelling solution, I did mention this. I think this is our premium 3D product. We still see this as a blue sky opportunity. That is currently the smaller part of our business, but we definitely see the potential to grow this quite significantly. You'll see the image on the screen is from Las Vegas. So we do have various projects we undertake in Australia and the US, and also a lot of off-the-shelf assets for these regions as well. So if you wanted to go in and buy a 3D model of Las Vegas or a 3D model of Melbourne or something like that, you can certainly go and do that as well. And we do it on a project basis as well. A lot of different applications for this. I mentioned with LiDAR as well, we can do change detection over time. So we've recently done a project for the South Australian government where we're monitoring sand movement over time. Quite often engineering companies are using this as a base map or a context layer, if you like, so that when they're working on a new development or a new project, then all of the existing information is in the background. We've even had applications where we've used it for virtual tourism, planning, gaming companies, things like that. So I think a lot of different applications for this one, and I think certainly we see this as a big opportunity. So I've talked about this a little bit as well already, infrastructure, environmental management, certainly a lot of architecture, engineering, construction, utilities, those sort of companies. And that's a growing market. And I said a lot of government, a lot of, really quite a diverse range of different customers in different regions and different industries. So you can see some of the companies we work for. So everything from Google and Codemasters, who are I guess not our traditional kind of customers, but this is certainly in here a lot of big engineering companies as well. So the likes of Acciona and John Holland and Jacobs, real estate companies like REA and Domain, and obviously a lot of different governments, LGAs and things like that as well. So we have a strong board. So everybody, all of the four board members have 30 plus years experience in their field, long-term board members, with the exception of me, but certainly a very strong board and a very strong executive team who have sort of 20 to 40 years experience in their field as well. So very, very strong board and executive team, and certainly a lot of passion, a lot of experience within that group. So in terms of the market opportunity, we're one of only 2 aerial subscription or image subscription services in Australia. So we have a pretty good idea of what that market is. We think it's sort of around the $100 million market at the moment, but has the potential to grow as more and more people maybe make the transition into an image subscription service. LiDAR, we think, is sort of around a $50+ million opportunity there as well. And this is based on just understanding of the competitors and how many sensors they have and all of those sort of things as well. And I mentioned 3D as a blue sky opportunity. So you can see in Metro Map, 11.5 million revenue in FY25, only, scratch the surface in terms of market share. LiDAR, again, a lot of growth potential there within the market, and 3D, I think we in a sense the sky's the limit in terms of what we could do with that as we evolve it. Some of you will be aware that earlier this year in Q4 of FY25, we undertook a strategic review. So this was just after my appointment, and just I guess a general feeling across the company and the board that we perhaps the value of our securities didn't represent our real value in the market. And so we just decided to look at every aspect of the business and just see if there was ways to extract that value. So we didn't spend a lot of time, gazing at things. We focused on action and taking steps as we found things along the way. So we took around about $2 million out of our cost base. So that was significant. I'll talk about our cash position a little bit later, but I think that was a significant change for us. We looked at our vast database of imagery and 3D models and LiDAR data, and so we've had some success already in trying to monetize that in terms of getting more use out of it than what we do. We've got a bit smarter with using our utilization of aviation assets, and also invested in our sales team as well. So we brought people in from competitor companies, and certainly with a lot of experience in that area. Some reorganisation. So we were very much organised in these 3 business units. So we're now operating as one company, one production team, one product team, all of those sort of things. And importantly, our sales team can sell any of the products now as well. And I mentioned at the beginning of this slide that we think we're, obviously we think we're significantly undervalued. And so we are starting to invest more in brand and investor engagement as well. In terms of FY25, so we had just under $24 million of revenue. So this was about 3% lower than the previous year. The reduction was to do with LiDAR. So we had growth in MetroMap and 3D, but we had a softer LiDAR market. Importantly, I think for us, our EBITDA went up during that period. So you can see it's sort of in that $500,000 range that's gone up. So this, in effect, is a result of our cost reduction activities in Q4. So we expect to see that $2 million cost reduction activities realised in full during FY26. So this is quite a significant thing for us. $3.88 million in cash balance. I think again throughout the financial year that looks like a larger cash burn, I guess, but it doesn't paint the full picture in terms of only a quarter of that was in the second half of the year, and really significantly for us, we've stopped burning cash in March. So that's linked to our our uptick in sales, but also our cost reduction activity. So that's a really significant thing for us. Annual contract value. So this is this is recurring revenue. This is a measure of how many subscribers we have at any particular point in time. So this has jumped up 13% in FY25. You'll see most of that happen in the second half as well. So you could conclude that our growth in the second half was obviously more than 13%, and our subscription revenue was up to 9.57. So I'm going to go through just quickly the 3 different business units. Record ACV in MetroMap, record revenue in MetroMap. Growing percentage of our business is MetroMap. So we're sort of at 40% of our revenue relates to our ACV. This is growing all the time, and certainly we don't think it'll be very long before that goes past 50%. Importantly, on the bottom left there, we're maintaining a solid growth rate over the last couple of years, but I think the graph on the right is the part that excites us, I guess. So I think in the first 8 months of this calendar year, we've grown MetroMap ACV roughly 30% on an annualized basis. And something we haven't disclosed, I guess, previously, but we are quite excited about. MetroMap is a fixed cost base. So we capture a certain amount of imagery, our people, our aerial capture, and our processing and all of that sort of stuff is a fixed cost. The more we sell, the costs don't go up much at all. And so importantly, at the end of August, we had this 11.1 ACV, which is getting into the break-even range. And so what happens when we get through that cost for MetroMap, we're roughly generating about 80% margin out the other end of that, where our storage costs go up and a few things like that, but largely fixed cost business. So once we get past this break-even phase, this becomes a very good business very quickly. So our Metro Map revenue, I think you can see again the green bar, it's growing year on year. Certainly the dark blue area is one of the areas that I said we were focusing on, which is the off-the-shelf sales and and monetizing this database. So that's a focus for us. Our LiDAR revenue was down about 3 million. Like I said, a lot of this was to do with timing. We won projects where the revenue won't be recognised until FY26. We did also see some margin reduction as well. So I think we're optimistic about FY25 and that sort of coming back. Particularly, we won a $1 million plus deal with Shell in July as well. So all things looking positive for growth in terms of the LiDAR business. 3D, we're looking at developing our product and just getting more firm on what our value proposition is here and where we're going to target, what we're going to do to develop our product. Still undertaking good projects for Australia and the US. So we see this as something that is not going to hockey stick this year, but we still think has the opportunity to grow significantly over time. So in terms of our value proposition going forward, I've mentioned a few times now that the Metro Map growth that we've had recently, we've got into this break-even territory. We feel like this is a real inflection point for Metro Map, but also for the whole business. So we've the last 6 months we've got Metro Map into that break-even position. We've stopped burning cash. We've got a really strong sales team in place now where we've got a really healthy pipeline. So we see this as a real inflection point where the investment we've made in Metro Map over the last 5 years or so is going to really start to pay off for us. And we're really excited about what's coming with that. I think with LiDAR, we continue to try to build our pipeline on that. So we have a very consistent win rate. So I think the challenge there is for us to build our win rate. Two main focus areas there. I guess we're going to take market share from competitors. We're going to try to do that, but we're also going to try and grow in some of those markets I mentioned, like ag tech and the renewables market, those kind of growing areas as well. We're also looking at different ways to deliver this as well. So we haven't gone so far as to suggest we're going to do a LiDAR subscription, but we do think that there's different ways of delivering the LiDAR data to our customers other than just a hard drive or a data download. So we are kind of looking at technically more efficient ways of delivering that data to our customers, and we think that'll create a competitive advantage for us also. And for 3D, I sort of mentioned on the last slide that I think we're going to continue to pursue opportunities in Australia and the US and also any other locations around the world. And we're going to really focus on getting our product market fit correct, working on our product and our use case and our ideal customer profiles and those sort of things for 3D. So we're incredibly optimistic about FY26. I think FY25 was certainly the second half of the year was very positive for us and gives us good momentum. And the first couple of months of FY26 have also been very strong. So we're very optimistic about the coming year. And I think I'll leave it at that. Thank you for your time, and I guess have run a little bit over time, but I'll hand over to Mark and to any questions that might have come up.
No, you're fine, Rob. We're pretty much there. One question, and I might expand on it, is the competitive landscape that you operate in. Because we've had Pointera on here, we've had RemSense on here, we've had Rocket DNA on here. The question references Nearmap, which used to be listed. Which kind of So maybe just talk about compare and contrast where you different to all of these other providers, or is everybody kind of focusing on different, whether it's verticals or segments or product offerings? Just give us a sense of what the landscape in the business looks, because from an untrained eye it looks like everybody's kind of trying to do the same thing.
Yeah, so I think on the Metro Map side that isn't the case. I mean, we're in a two-horse race there, I guess, with a private equity US owned company now, and so I think that kind of gives us an advantage in terms of we're smaller, more nimble, and importantly, particularly for governments, we are Australian owned as well. So we have I guess our sales team, when I said we strengthened a lot of ex-Nearmap people working in that team now. So I think we have a pretty good idea as to what we need to do to go up against them. On the LiDAR side of things, again, we have private equity overseas owned a couple of big competitors, but only I'd say three large competitors in the market, and certainly strengths in different industries as well. And so the success we've had in the ag tech and carbon farming sort of area, we think we're leading in that area. But certainly there's competition there, not a lot of competition, not a lot in terms of the numbers of competitors. I think, like I said, on the MetroMap side, maybe we're in a duopoly, and on the LiDAR side of things, maybe we're one of only three or maybe four larger companies.
Yeah. And in terms of, having the LiDAR capability with the MetroMap product, maybe, on the other side, and 3D as well, how important is it, to have that like vertically, if I can say, integrated model, where you've got your own LiDAR vision, which is doing stuff for, clients, but is also feeding in data into the subscription products. And how does that compare to what others are doing? Are they outsourcing their LiDAR, and then they're really just focusing on the end product that goes to customers?
Yeah, so I think we think that LiDAR gives us an advantage. So imagery is two-dimensional. I think LiDAR adds the third dimension to it, and so certainly we've started to add building heights and terrain heights and those sort of things into MetroMap, whereas previously that was a pure 2D product. So that's definitely helpful for us. We do also use our LiDAR planes to capture MetroMap imagery in a kind of dual purpose mission, if you like. So we're capturing LiDAR and imagery at the same time. So we think that gives us an advantage as well. 3D is in a sense in MetroMap in some form. I think we see potential to put more and more LiDAR and 3D data into our MetroMap. So it's not simply an image platform, but I think what customers want is not just pixels, if you like, but they want insights and information from the imagery or from the geometry data as well. So I think a lot of product development work going on in our MetroMap product, and taking it out of just 2D imagery is a big part of that.
Yeah. And if we can stay on MetroMap maybe for a second, the big pickup in users, is that coming from one or two big customers signing on with a lot of licenses and a lot of seats, or is it general across the board, just a better focused sales operation that is engaging and getting customers kind of across the line?
Yeah, I think it's both those things. So I think we're increasing the numbers of new clients, and we're also increasing our average deal size as well. So I think it is quite spread out. I think we announced to the market our Landchecker partnership, which is obviously one of the big deals that we've done. But I think the growth is, like I said, twofold. It's in the numbers of customers, but also larger deal sizes as well.
Okay. And in terms of the 3D, that has historically had a kind of a relationship with Google, where they've worked with you guys on doing for specific cities, mainly around Silicon Valley and a few others. Is that partnership still in place, or are you now kind of soloing ahead with 3D on kind of your own terms, or maybe just give us an update there?
Yeah, I think the relationship's still there. I think we're, in terms of a partnership, I think we are, I guess, spreading out the amount of work we do with a whole heap of different organizations. So I think we did one last year with the University of California, and so certainly nothing specific with or dedicated with Google, but certainly looking at all these different applications. I think one of the slight challenges, I guess, we have with 3D is there's so many applications for it, and we just need to focus on what those best use cases are.
Yeah, that you're not clashing with somebody else who's maybe in the same vertical. Because I did notice, you had it cut down to three there, very specific ones on, coastal erosion being one of them.
Yeah, certainly in Australia, that seems like a big market. Yeah, I think there's we've got more coastline than anyone else. So I think certainly our approach is to look at the projects that have been successful and see how we scale those.
Yeah. And in terms of, I know it's very nascent days in 3D, and the revenue is a long way back from where it is in Metromap. But if we, cast our minds forward, 3, 5 years in advance, should we think about 3D is the same as Metromap as, like, there's a kind of a break-even point at some point, and it's another highly recurring, high margin SaaS type business, with those with a kind of similar margin profile to Metromap once it actually gets to that point.
Yeah, I mean, at the moment, it isn't like that. It's a project-based business
Mm,
where scaling requires us to add more people in that. We are certainly our goal as a company is to become a SaaS or a DaaS business, and so certainly we are looking at options for LiDAR and 3D in terms of how we deliver it, and do we do it on a one-off basis for individual customers, or do we come up with a solution which is available to a much wider audience? So I think we do a little bit of it with our 3D city models, the off-the-shelf models, where we capture once and process once and try to sell a lot of times. But I think overall as a company heading towards increasing recurring revenue is our goal, but nothing specific that we're doing at the moment with 3D in that regard. But it's on our mind for sure.
yeah. And in terms of Metromap, new business and where those new clients are coming from, is that coming from I know Land Checker, you can kind of say is kind of quasi-government, I guess, if you want to maybe put in there, but is it coming more from the government sector, and councils, getting more on top of, development that's happening within their purview, or is it, more coming from the commercial space in terms of what people are thinking about down the line for expansions or greenfield developments, redevelopments? Maybe just give us an insight on where those new customers are exactly coming from.
Yeah, so I think architecture, engineering, construction would be our strongest vertical. I think we
Mm,
do quite well in government also. I think I think they're probably the two where we're quite strong. I think what's interesting is we have, I mentioned the duopoly, so we have the opportunity to take market there, but we are seeing more and more customers at the lower end that haven't paid for a subscription service before, that are kind of looking at our entry level product and kind of going, well, I can do virtual quoting, and I can do virtual site visits and things like that as well. So we sort of see that there's two ends to the market, and we are developing an e-commerce solution for the lower end of the market as well, where customers could self-serve.
okay, perfect. Rob, we've slightly gone over time there. Apologies.
All right,
But
no problem.
great to have Aerometrex back on. It's been a while since we've caught up on this story, and it was good to hear it. And yeah, hopefully like I said to Troy previously, hopefully we can get you back in maybe in the start of FY26, and give us an update on how the half has gone.
Sounds good. I'll be happy to.
Great. And we will leave it there. Thank you to Rob for joining us, and indeed Troy before that. That concludes this morning's session. I wish everybody a good rest of their Thursday. Thank you.